Welcome back to the Dividend Diplomats YouTube channel. You know you're rolling with Bert over there and your boy Lanny. We are the Dividend Diplomats, and it's time to dive into the three stocks we're watching right now here at the end of July to see which stocks are here to buy.
Before we get into our stocks to buy, smash that subscribe button, give us a thumbs up. We're on the doorstep of 10K, everybody. So thank you. Let's go. We're almost there. We appreciate it. So get ready, get hyped. Now, the fun part. Let's talk some dividend stocks, Lanny.
Let's talk dividend stocks, Bert. You know why? Because that's what dividend diplomats do. Kind of like in Wedding Crashers, because that's what Maryland does. Crab cakes and football. The S&P 500 is still over 4,400 here as of this recording on July 27th. Bert, what do you make of it?
Hanging on by a thread at 44.01, but doesn't matter. The market is as hot as ever. It can't shake the record highs that it continues to have. I mean, we've seen a few red days here in July sprinkled in, but that's in the minority. The market just continues to trend upwards. It's insane.
Bring on the bloodbath, because you know, as dividend investors, we are always ready to deploy that capital into those undervalued, on sale dividend stocks.
But hey, even when the market's rising, there are still plenty of dividend stocks to be had. There are still some great companies that have increased their dividend for decades here that are showing signs of undervaluation. So coming into this week, we talked through some of our recent purchases, and this week Laney took out some research, got the old pen and pencil down, probably actually typed everything in Google Sheets, doesn't matter. Did some research and found three undervalued dividend stocks that we want to feature today.
No, exactly, Bert. I mean, no matter what the stock market is doing, everybody, still keeping your eyes across all your tickers that you're looking at. We probably look at hundreds of tickers a day. We do not own hundreds of dividend stocks. Those that do, congrats to you. That's a lot of 10Ks and 10Qs to read. We're here to keep it hopefully easy on the channel. I usually bring in at least one, if not up to three dividend stocks that I usually watch, and that's kind of what I did here. Really evaluated where stocks were at here on July 27th, and actually quite a few of them have been declining downwards despite great earnings releases, if that makes sense, Bert.
That makes all the sense in the world here. And what's cool about this list is you're going to see Lanny already owns the three companies, so he's not going to be adding. He's not going to be crossing that 100 individual stock purchase amount yet, although you probably own more than you think, Lanny. You're probably not. You're definitely closer to 100 than you are 50.
No, I'm probably still closer to 50.
But you had to think about it, which means it's more than you think. So
I have to think about it. Yeah, I am closer to the 50 than the 100.
All right. So that being said, these are three great companies. They clearly are, because Lanny's bought them in the past. I own two of these companies. I didn't actually quite jump on the train for the third one here. Yeah, we're rocking on here as we get ready to go through. So Lanny, really fast, before we go into the three companies, let me quickly run through the three metrics we use to find these undervalued dividend stocks using the Dividend Diplomats Dividend Stock Screener. PE ratio less than the S&P 500, payout ratio less than 60%, and a history of increasing dividends. And we'll also talk about the dividend yield and the stock's performance for each one of these three. Now the time is in, Lanny. Let's see, who is number one here on your listing? Tell us about this mystery dividend stock.
Of course. And I mean, again, this is based on pure metrics. In fact, this first dividend stock, we just recorded a video about them about a week or 2 weeks ago about
investing. Off the presses. That is what we're trying to say.
Da-na-na, da-na-na. So the first dividend stock here that I do want to talk about, because price is price, beating earnings is beating earnings, good balance sheet, strong liquidity. COVID really has put the damper on supply chain issues.
How can a stock like this be undervalued, Lanny?
How does it happen? Well, Intel, INTC is the first dividend stock we're here to talk about. Everybody knows Intel. Again, they're in your computers, your phones, maybe your cars, your vehicles, who knows? Probably in your, a lot of your smart devices potentially around your house. but Intel continues to drop in stock price. In fact, year to date, they're only up 7% right now, which definitely does not compare to the S&P 500 as a whole.
Not at all.
Yeah, over the last 52 weeks, Bert.
Yeah, no, it's insane. They are definitely decreasing and going in the opposite direction, which is hilarious, as you said, because their earnings are great. The metrics are looking great for them. And they also just had that big release today that Qualcomm selected Intel to start producing its new chips and its new products. So hey, there's a lot of positive vibes here with Intel as they continue to discuss their transition to make sure they can compete with a lot of the companies. So a lot of good news here. It's interesting that the price is down. So let's see how it performs in the metrics, Lanny. You want to walk us through the first metric here at the price to earnings ratio for Intel?
Of course, so Intel trading at $53.18. Analysts are expecting $4.62 per share. So taking that over that projected EPS, you're looking at a nice solid price to earnings ratio of 11.51.
Boom. The S&P 500 historically has a forward PE ratio between 20 and 25, wherever you want it to land in there. So Intel is nearly half of that amount there. It's insane how much of an undervaluation they are trading to the forward earnings on the S&P 500. But that's great news here. So why don't you tell us a little bit here about the dividend payout ratio, Lanny? Do you think this dividend is safe for Intel?
It's safer than safe. It's whatever they're gridlocked in. They are, it's not even a thought right now about their dividend payout ratio, about the safety of the dividend. Why? Because it's only 30%. They pay $1.39 in dividends, obviously spread over those 4 quarters. Taking that over $4.62, Intel's dividend payout ratio is significantly low and actually is the lowest of the 3 here that we're about to talk about.
Boom. That's fantastic. A nice big check mark there, which is great.
You talk about the dividend growth. I want you to talk about this third metric.
If you insist, I will. I will happily talk about their dividend growth because they have plenty of room to keep growing that dividend, as you just showed here with the dividend payout ratio. They've increased their dividend for 6 consecutive years. They're working on building a nice little streak here, and their 5-year average dividend growth rate is 6.28%. So mid-single digits for Intel on their dividend increases. Fantastic stuff. So with that, tell us about the dividend yield, Lanny. What is the yield on Intel?
The yield is almost 2 times the current S&P 500 yield, which is literally, I believe, between 1.3 and 1.4% right now because of the appreciation in the market. And Intel's yield then is 2.61%.
So let me run through the metrics here for Intel to highlight why you added this company to item number 1 on your watch list. PE ratio 11.5, payout ratio 30.09%. They've increased their dividend for 6 years with a 5-year dividend growth rate of 6.28% with a yield that is double the S&P 500 of 2.61%. Makes all the sense in the world to me. I can easily see why this company is here on your watch list, Lanny.
A lot of people don't like Intel, think that they're out of favor, think that AMD is going to take them over. They still own majority of the market share.
Yeah.
It's not to say it's significantly hard to just ditch Intel, but AMD can only make many chips as well.
No, I think that's a great point. The switching costs for somebody to move away from Intel are incredibly high, and that's why the company has taken over its position as dominance. They are great at what they do. They can make great chips, and yeah, it's hard to switch away from Intel once they're in your system.
How many here have Intel on their watch list? Who here has been buying Intel stock, especially on the recent dip? If you haven't noticed, the stock price for Intel is actually trending downwards to almost $50 per share. Earlier this year, one can argue that they were about to pop over $70. I think that was back in mid-April. Somebody could check the stats.
It wasn't that long ago. I think that's the important thing. So if they're down $17 per share from that high just a few months ago, you can easily see why they are undervalued. But number 2, Lanny, I'm excited, Lanny, because I don't think a lot of people are going to see this company coming because we haven't really talked about it very much on our YouTube channel, even though, as I mentioned earlier, you invested in it several years ago. So why don't you tell us about this company and give a brief background on them?
It is an oldie but goodie. If you're really into engines, fuel systems, filtration systems, You're going to love this dividend growth stock. Let me tell you. This company's name is Cummins, ticker symbol CMI. In fact, a few people had commented on one of our recent videos about this stock to say, hey, would we ever consider it? And I was like, hey, been a long time shareholder, baby.
You're darn right we'd consider. We'll consider every dividend stock. Lance, like I beat you way to this one a while ago. I'll see you at the shareholder meeting, brother.
Exactly, Bert. You know it. I was like, you know your role and you could shut your mouth. No, I'm kidding. But yeah, Cummins, ticker symbol CMI, July 27th, their stock price was at $233.80. I mean, people are gonna think, holy smokes, that's a high stock price and might be a little heavy on the wallet. But I'll tell you that these guys were actually trading at a little closer to $280 back in the middle of March. So they're almost down almost $45 a share.
So they've basically shed one Intel share from their stock price and their high a few years ago.
Yes. They've had a nice run up in their share price, but on a 52-week basis, literally last end of July to this end of July, they're only up 20%, which obviously does not even compare again to the S&P 500, and they're only up a little over 5.5% year to date.
So you're going to keep seeing this recurring trend for a lot of our previous watch lists. And these are these companies that even though this market remains hot, they are just continue to lag. They're dogs right now. They are just trying. They're behind, and this is the time to maybe add them to your portfolio to see if you can catch them ahead of that pop that may come in a few years.
People always know the strategy of, the dogs of the Dow, where you buy the worst performing stocks in the Dow. These could be some dogs lately, but I'll say dogs always find time to eat.
Yeah, the dogs of the diplomat. That's what we're talking about here.
Right. So, they're not even dogs. They're great performing companies, very profitable, extremely valuable companies.
Yeah, we're talking award-winning dogs here. They're winning best in show. That's what we are talking about here. But let's jump right in here to some of the metrics here. I can kick this one off, Lanny, if you're fine with that.
Go get it, player.
All right. Price at the close on 7/27, $233.80, as you mentioned. Forward earnings, 16.13. PE ratio, 14.49. Again, below forward earnings of the market.
There it is, a nice undervalued metric right there. Significantly below the S&P 500 on a go-forward basis and a current basis. So that was the first dividend stock metric for CMI. But Bert, what is that payout ratio looking like for Cummins?
Yeah, let's go through it here. Let's take a quick look. Their dividend is $5.80. You divide that by the EPS of 16.13, a payout ratio of 35.96. So just a hair below our perfect dividend payout ratio range.
Plenty of room to continue to juice up the dividend. In fact, they had a really, really nice increase this year. They actually increased back, a few weeks ago, again, this past month. They increased it from $1.35 per share to $1.45, a nice, cool 7% increase.
There it is. Yeah. And I mean, you're going to love when the company increases their dividend. And what's funny is that is right in line with their 5-year dividend growth rate, too. Moving into that third metric, 6.66%. All you Iron Maiden fans out there, you're going to smile with there because that's your number of the beast right there. They've increased that dividend for 15 consecutive years.
That matches your tattoo across your chest.
Yeah, I got some nice Iron Maiden tattoos all over me out there. So, yeah, there was that metal phase. Long black hair down below the shoulders, just leather in the closet. It's all ready to go. Kidding. Really? Yeah, 1 million subscribers. You're going to see how many tattoos I have, everybody. Remember, I'll keep saying that. You may or may not be disappointed. Teaser.
That'll be a pretty good taker outfit, but I might have to tombstone you and say, Russ.
Yeah, I'll pop right back up as Undertaker always does.
All right, so, what is that dividend and growth? How many years?
They have increased that dividend for 15 consecutive years after that last dividend increase. So they are a decade away from becoming a dividend aristocrat. So hopefully they'll be in the class soon in 10 years from now.
Or it'll be 15 when that happens.
Hey, Dogs got to eat, right? It applies to everything.
So what's that dividend yield look like for the special bonus metric?
2.48%, so just a little bit below Intel, so not bad, still way above the current S&P 500.
In the words of my Italian relative, it's so good. So, in summary, for Cummins, ticker symbol CMI, you're looking at a P ratio that's only 14.49, a payout ratio at 35%, dividend growth right now over 15 years at an average rate of almost 7% with almost a 2.5% dividend yield.
Fantastic. Dividend stock number 3 on your list, Lanny. This one has been featured on our YouTube channel plenty of times before. We've been consistently buying it over the last few months. I'm excited to see this company is still on the watch list because that also means for me, I can still keep adding 1 to 2 shares at a time to be building our position. You put it out there, Lanny, the ticker, so I'll just throw it out there for everybody now. This company is Verizon, ticker symbol VZ. Why are you watching Verizon, Lanny? Tell us. Tell everybody right now.
Red. I'm trying to outpace Warren Buffett with the number of shares each of us has. He has a couple more than I do. No, I mean, I'm trying to build to at least 75 to 100 shares of Verizon. You know,
yeah, you'll get to Buffett soon. You'll get there.
Yeah, soon. Once I dig up that hole in my backyard to find a couple $1 billion to throw at them.
As Buffett says, dogs got to eat.
Yeah, he does. He does that all the time. He texts me it all the time. It's crazy. He's probably wearing his Browns jersey right now. Maybe his LeBron jersey, one of them. Probably LeBron, to be honest.
Probably. And him and I got matching Iron Maiden tattoos at the last shareholder meeting, too.
I'm just glad you got your Tyson face tattoo removed before the video. So
yeah, hey, it's gotta maybe once we get to 10 million subscribers, then Lanny and I will be getting Tyson face tattoos.
I will not. But Verizon Wireless, big red, 5G winner here. They are really blazing the path. They beat estimates. They're really doing well from their last financial release. Subscriber base is doing okay. They've been consistently trading in that 54 to 57 range. Most recently at the end of July 27th, they're at 56.20. So to quickly go into that first stock metric for Verizon, Bert, analysts are projecting a full year of $5.12 in earnings. So taking that with the share price of $56.20, that PE ratio is still below 11.
Insanity. And that dividend payout ratio is still perfect because they pay a dividend of $2.51. Divide that by the earnings. That gives you a 49% dividend payout ratio, right smack in the middle of our range. Tell us about the history, Lanny.
16 plus years of consistently growing their dividend, albeit it's only at an average dividend growth rate of about 2%. They really do resemble AT&T when it comes to that dividend growth, but we all know that AT&T will not be increasing that dividend due to the spinoff of Warner Media Discovery. Thanks, AT&T. Sorry, AT&T stockholders out there, or congratulations. We'll have to find out. And currently for that bonus metric for Verizon, given that their dividend, throughout the year in total is $2.51, they currently yield 4.47%.
So to quickly summarize Verizon here, P ratio just below 11, perfect payout ratio of 49%, 2.12 5-year DGR, 16 consecutive years of increases, and a yield of almost 4.5%.
It's hard not to have Verizon on a stock watch list right now, especially if you're a dividend growth investor. You're getting great yield, plus you're getting a stock that really hasn't moved much from a price standpoint. If you take a look here, again, they've only gone up this year to date, actually down 4.5% throughout the year, and still down over 2% from last July to this July.
Yeah, I easily see why they're on your watch list. Like all the 3 companies here, it makes perfect sense that you're watching Intel, you're watching Cummins, and you're watching Verizon going forward. So do you have any parting thoughts about these companies, Lanny? Do you want to rank them quickly, or do you think all 3 of them are the same in your eyes?
I really want to build that and finish that position to Verizon, so they kind of fit in my number one based on that. Intel is a close second just based on sheer price drop.
Mm-hmm.
I mean, chips are we all know what companies have been doing once things have roared back up. So just get ready for Intel. Again, not saying I'm that, I'm just putting that note out there. And then Cummins, if you want a company that's just going to perform well, they kind of remind me of when I bought Granger 5 years ago. And that just has been an engine that just keeps doing okay, keeps making more money than the year before and keeps increasing that dividend. So it's, again, you really can't go wrong with any of the three. What about you, Bert?
No, I agree. I like all three. I don't have a position in Cummins, so just for me, for the sake of trying not to add a new position yet, I might shy away from them, but I can easily see why you or another investor would be buying them up. Like you, I'd love to continue building my position in Intel. That's one that my wife and I recently started, but I want to keep getting it larger because I agree on the very rosy, positive outlook into the future. So this might be a great time to build that nice base.
So what do you think out there as the viewer, the investor, doing the Hogan? You tell me, brothers. We want to hear it in the comments. If you guys are ready for the 10,000 video, give this video a thumbs up. Let's smash that. Turn that mother effer blue. We're here for you guys. Bert, any parting words from you?
Lanny, send these suckers out of here. Let's get out of here onto the next one.
That was Bert the Hurt, and this is Lanny from the Dividend Diplomats.
Over now.